Hola, bon dia. Bon dia i benvinguts i benvingudes a aquests esmorzars en línia organitzats per l'àrea de startups d'Acció. Bé, en primer lloc, desitjar-vos un bon any i pel que fa a l'esmorzar d'avui porta per títol la inversió en startups Deep Tech. I per què l'hem escollit? Doncs bé, en primer lloc, i ja remunta bastant a l'ADN de la nostra organització, quan vam començar a donar suport a spin-offs universitàries. Doncs la primera raó és perquè tenim interès en seguir promovent i promoure més startups Deep Tech i sobretot que aquestes startups puguin créixer sòlidament. Volem, pel seu impacte positiu en temes de creació de llocs de treball de qualitat, en protecció de les startups, en creixement d'aquestes startups, en temes de sobirania tecnològica i sobretot també en impacte positiu de les seves solucions a la nostra societat, que n'hi hagi més i que se superi la xifra de les 291 startups Deep Tech a Catalunya que hem detectat a l'estudi que vam presentar aquest passat mes de desembre, que és el vostre abast a acció.gencat.cat. I per assolir aquest objectiu, entre altres coses, ho fem amb la línia Startup Capital, que ha finançat des del 2017 amb un import de vora 8,3 milions d'euros a startups d'aquesta tipologia, o amb la línia que va anunciar el conseller el passat 21 de desembre de coinversió, ja sigui en Business Angels o ja sigui en fons de capital risc, i que està dotada d'un import de 2,5 milions d'euros. Bé, en segon lloc, per què? Doncs perquè al final un dels nostres objectius també és internacionalitzar l'ecosistema de startups. I en aquest cas l'internacionalitzem des de casa, és a dir, el nostre ponent forma part d'un grup de capital risc francès, que és Elaia Partners, amb seu a París, però ell viu a Barcelona. I per tant, tota aquesta connexió també ens fa molt contents que pugui esdevenir-se a través d'un esdeveniment que organitzem. I finalment, lligat al ponent, tenir experts que tenim amb un coneixement fruit de l'experiència, pensem que no té preu i el fet d'estar disposats a convertir-lo també ens fa molt content. I bé, el nostre ponent qui és? Doncs bé, el nostre ponent és el Sébastien Lefebvre, que és partner a Elaia, que és un fons de capital risc, com hem dit, referència a França, però que també té molta voluntat de presència i compromís aquí a Catalunya. El Sébastien es va formar a l'Escola Superior de Ciències i Tecnologia de l'Enginyeria en Nancy i també va fundar i ser el CEO de Mesagraph, una empresa que va ser adquirida per Twitter i aleshores ell va anar a treballar per Twitter i va ocupar diferents llocs de responsabilitat, com director de creixement d'operacions i finances a Londres o també director de creixement a Aqemia. Posteriorment, i ja en aquest cas a Barcelona, va ser emprenedor en residència a Esmorzar. I bé, i sense més explicacions ni preàmbuls, l'esmorzar d'avui serà en ponència, en anglès, en aquest cas, i després preguntes per part dels assistents. Les podeu fer en català, ja les traduiria jo, o també les podeu fer directament en anglès. I podeu intervenir i seguir-lo per Twitter a través de l'etiqueta #Facció. So, Sébastien, thank you for being here with us, and the floor is yours.
Thank you, Oriol, for the kind introduction. Thank you to Isaac and the whole Axio team for having me. So my name is Sébastien Lefebvre. I'm honored to be part of this panel, and I hope we can have the time as well to interact after I share some of who I am and some of who Elaia is and what we're doing here in Catalonia. So my name is Sébastien Lefebvre. I'm an engineer by training. I started my career over 20 years ago in Montreal, Canada, as a young engineer in telecommunications and for a cable company called Videotron. There's an anecdote, but that's very important. I connected with the CEO. At that time, the company was 6,000 people strong. And the CEO asked me to deal with innovation for the company. The CEO was also the founder. He was 70 years old, and the company was massive. And I had this opportunity to work with him. His name is André Chagnon. And to have lunch with him for an extended period of time for over 6 months on a day-to-day basis. And we started to nurture a relationship. And he gave me the taste for, innovation and deep tech, tech-intensive innovation. I became, shortly after in 2002, an entrepreneur. I sold this company in 2005, became a CTO, then became a VP of a business unit of 50 people between France and Brazil. And in 2010, when my daughter was born, I started another company called Mesagraph, which was acquired by Twitter in 2014. Mesagraph was a deep tech company focused on natural language processing. And then at Twitter, I became the director of growth for Europe, Middle East, and Africa. I was based in London at that time. And after 3 years and a half there, I decided to relocate permanently to Barcelona. And I now live in Barcelona since 2018. So that's about me in a nutshell. After that, I've done some business angel investments. I have been the entrepreneur in residence for the 10 Canton program at ASICS here near Pedralbes. And then I joined Elaia, first as a venture partner and now as a full-time partner to support in investments in deep tech. So Elaia is a company that has been created over 20 years ago by a French researcher with Catalan accent. He was born from a Catalan mom. His name is Xavier Lazarus, and he's a PhD in mathematics. He's also an entrepreneur. He started the first company prior to becoming a VC. And after that, Elaia has evolved over time and has built a very strong track record in deep tech, tech transfer, and tech-intensive companies with different unicorns, such as Criteo, who was introduced at the Nasdaq in 2003. Also Miracle or Shift Technologies are companies that we invested in at the seed stage and are now large successes. That's for the DNA of Elaia, science and technology. In 2017, Elaia created a second line of business fully dedicated to tech transfer and deep tech. And we partnered with academics to do so. The first partner is Paris Sciences et Lettres, which is a group of 11 universities, prestigious ones in Paris, with a few Nobel Prizes that have been through this university, one of these universities. In 2020, we created another fund with another partner, which is INRIA, the National Research Institute in Computer Science in France. So now we have in the deep tech seed practice, 2 operating funds, each of them being 77 million, 76 for the first one, 77 for the second one. And we've been active in Catalonia for a long period of time, mostly at the beginning, thanks to Xavier's connection with Catalonia, because you know, he was partially raised here. At least was spending all his summers here, and he has a strong connection with his family here. And after that, we had Christophe Primo, whom some of you might know, who joined the team in 2017. And Christophe has established a strong presence here, leading you know, a number of deals, some of them you know, highly visible, like Hold It. And I joined in 2020 to expand the deep tech practice. And over the past 12 months, we've invested in 3 deep tech companies here in Catalonia. So that's for you know, Elaia in a nutshell. And now I will deep dive a little bit into deep tech investing, some of the challenges and opportunities, and maybe also share for the entrepreneurs who are here with us, you know, a bit of the process, the ticket sizes, how that works, how to engage with us, etc. So this process is always highly selective. First of all, we see over 4,000 companies per year. I mean, it's not that we meet with them, but we have 4,000 projects coming in every year. And we see a decent proportion of that, but we invest only in a few dozen companies per year, maximum. So this process starts with first a review. When we receive a project, we review, we see if this project matches the investment scope and the strategy. And if yes, then we might decide to assess for an initial evaluation. Then what happens is that we can decide to analyze and do an extensive review of the project. And if all the criteria are met for an investment, that's when we can extend the term sheet and discuss a number of the key terms, valuation, etc., while pursuing the evaluation along the way in parallel. After that, we enter the due diligence and finally the legal agreements. So this process takes about 2 to 4 months, depending on the shape and form of the deal. But we have a very flexible team, and we can accommodate shorter time frame if needed. In terms of tickets, we invest typically, I'm talking here specifically about tech transfer and deep tech. We invest specifically tickets between 300,000 euros up to 1.5 million euros. That's the first investment, knowing that we also have reserves for follow-on investments, and we can invest up to 7.7 million per line maximum for the best companies. So the tickets are split and sized accordingly to the stage of development of each company. So we have what we call the accelerating bridge, and typically it's dedicated for companies that are very early. Some of them, when we meet the founders, some of them haven't created the company yet. Of course, they need to create a company for us to invest, but that's typically, you know, the setup. One researcher with a co-founder or not, willing to start a project, getting from a lab or having a strong connection with a university or a research group. So it can be both or one of the two, etc. So when this happens, those tickets are about 300,000 euros. For more mature company at the other end of the spectrum, we can invest up to 1.5 million. And these are companies that typically are doing a bit of revenue already, and or that are more capital intensive, that might require more more capital to develop. And here in deep tech, it's very broad. If you look at purely digital deep tech, the capital requirements might not be that high, but if you look for hardware deep tech companies, medical device or nanomaterials or other type or biotech, the capital intensity might be stronger. So we adapt to the context, obviously, and to the requirements of the company. I see a question here from Jordi about the best number of co-founders for deep tech startups, and which reason in particular. You would have asked me that question 10 years ago. I would have responded 2 or 3. We were 3 in my company at Mesagraph, and I believed this has helped a lot, but only because we had a very specific roles and we didn't overlap at all. So the team was very complementary. So if you have more co-founders, you have that benefit, but you also have the risk of getting into trouble if you don't get along with people, or if people are not complementary enough and they overlap a little bit too much. That's one answer. The other answer is we've invested in companies, started by a researcher from a lab, and that I will come back to that later, but that's one of our contributions, to help hiring co-founders. And sometimes you have people and they've been doing research in academics for a long period of time. They don't know how to start a company, don't know to operate a company, but they have a unique piece of proposition, a unique innovation. In this case, I'm thinking about a company called Aqemia, Aqemia, and Maximilian, the CEO, was alone at the start of the company, but had found a way to solve Schrödinger equations in a very original manner, and that had application for many things. And we helped find a COO Emmanuel, who is now partnering with him, and the company is highly successful. So I would say there is no right or wrong answer, but the answer is obviously at least one, and I would say no more than 3, and there are always exceptions. So that's I hope that answers your question, Jordi. In terms of the support we bring to companies, what we need to understand here is that deep tech and tech transfer requires very specific skills. So in addition to entrepreneurship skills and support you might expect from an investor like Elaia, there are a number of other things that need to be there and need to be present in order for a tech transfer or deep tech investment to be successful. First of all, there's the tech transfer itself and the everything related to the negotiation of IP transfer, if it's coming from a lab or a university. And that is something that we've been doing a number of times now with successes. And I believe we've brought the process of tech transfer and IP transfer in general to what is now the state of the art of tech transfer. That's one part. It's perceived very often as tedious, which is true, can be tedious, but we found ways to streamline that process and make it, as fast and painless as possible, to the benefit of all parties, obviously. Then there's the question of hiring key people. I mentioned what we've done with Aqemia, but very often for people who are coming from the academic world, they never had to partner closely with someone and spend hours and hours and hours, every single day to create a company. And that's one thing. Second of all, the success lies in having different perspectives around the business and different point of views. That is something we help with directly, because when during the assessment process of the company I described before, we look at at projects and companies in a 360 degrees manner. And so we have a very good understanding of the strength, obviously, otherwise we wouldn't invest, but also some of the weaknesses or areas of attentions, as we call them, where we need to potentially, support and act. So the hiring happens through our extensive network that we have, and we have an extensive network from different horizons. A part of it is in the academic world, obviously. So now that we've been doing that for 6 years, I'm talking about the deep tech practice, fully dedicated deep tech practice. We've connected with a number of other universities across Europe, and we have lots of connections at the academic level to help staff companies. There's another perspective that's more around the business part of it. And here we leverage our connections with all the entrepreneurs we have funded in the past and our strong reputation among entrepreneurs. And also sometimes, our LPs can help provide names that we should look at for hiring in specific positions. Here we're talking about senior executive positions to reinforce the management of the company when it is a bit too centered or too anchored into science, for example, and not enough business. I see another question from Jordi. In your opinion, could a group of co-founders create a company working in remote? That's another one. That's a good one. There are different train of thoughts around that. My personal thoughts is that this can happen, but when this happens, this requires people who have done that previously, who know each other extremely well, who have a culture of documenting and writing what they do, not a culture of sharing information at the coffee machine. So that can work for software companies. The first ones I've seen working like this were in the 2007, I guess. So Ubuntu was one of the first software company to declare being fully remote from inception. So that's one train of thought. My personal experience is that if we hadn't been in the same room or aquarium all at the same time, that friction would have prevented us to be fast enough, to have that feedback loop between us, to converge or crystallize a vision and be successful. So I think it comes with pros and cons. My general recommendation would be to be together as much as possible, and being remote would be an exception. In very specific cases, you need to understand where you put your feet when you make such a decision. Obviously, at a later stage, it's a bit different. Here, I was very specifically talking about very early stage, like pre-seed and seed. Of course, later on, accepting remote work is also being able to hire, amazing talents that wouldn't relocate for some reason, but that can work for the company. So it's a balancing act between both. Claire Maura, hi, we are startup or you helping them for that matter, finding talents in which ecosystems and why? Do you have any method for scouting talented people? Yes, we do have methods for scouting talented people. So first of all, we have, within the investment company, within the management company, within Elaia, we have over 100 companies in our portfolio, and some people come and go, and they've done 5 years in one company, and they might want to go to another company, and they, of course, we have a very good understanding of who they are because they've been operating in one of the companies we follow. So that's one source of talents. The other source of talents, of course, is to is our personal network. We are 7 partners at Elaia. We've been working in tech and innovation for over 20-25 years. And we've built an extensive network of people. So, for example, I brought one of the former vice president of a major company to the board of one of our participations recently. And that's personal contributions. And my partner, Anne-Sophie, has done the same. So that's another source, the personal network of the partners. And finally, we work with trusted groups of hiring companies, like talents companies, that we have selected for their ability to source key executives. Generally, that tends to happen a bit later in the process, like more for Series A than for seed, mostly because of the cost associated with that. And finally, we have our investor base. So the interest of our investors, the high net worth individuals, the entrepreneurs, the corporates, etc. Their interest is to share good profiles and good talents that they wouldn't hire themselves for their own activity, but that they consider being amazing professionals. So that's how we source the talents. Hope that answers the questions. Sylvie asked a question as well. Good morning. Do you have any experience failure in your investees and some exits already? Yes, we do have a few companies that have been write-offs, and we have, of course, a number of exits. So we sold 11 companies last year alone, and we sold over 50 over the lifetime of Elaia. And so we, we sold, yes. So the short answer is yes. I don't know if you want more details, Sylvie, but that's both happens. Failure are inevitable, and we are venture capitalists by definition. We embrace a certain level of risks, and that's part of our job. But as responsible portfolio managers, we also know how to limit and to contain these risks for the benefit of our investors. So we have advanced, asymmetrical investment processes that allows us to limit the risks and the failures and maximize performance for our investors. But yes, we are taking risks. We're happy to invest in very early stage projects. That's part of our job. If we are not doing that, we wouldn't do our job, and we wouldn't deliver also the potential high rewards that our investors count on. And so that's part of the equation. Hope that answers your question, Sylvie. So apart from hiring people, I will continue on how we support companies. We invest with two types of securities. One is convertible notes, which can be also take the name of SAFE. Maybe some of you have heard about that name, SAFE, Simple Agreement for Future Equity. That's one way of investing. That's typically dedicated for smaller rounds for us, or bridge financing when we want to support a company to achieve a milestone that hasn't been reached yet, in order to set the company in a good position to raise a future round with new investors coming on board. So that's one type of securities we're using, financial instruments. The other type we're using, and the preferred type, is equity, obviously. And so that's the two main things. When we invest in equity, a board of director is constituted or being assembled with founders being represented, with investors being represented, and we also bring independent board members for their expertise to help guide the company. So this governance tool helps us to support the company effectively, and we and help with the strategy, with the overall strategy, with the go-to-market, with every aspect of the business where an early stage company needs support. And we like to be the sparring partner of the founders, meaning that we are entrepreneur friendly and we respect the voice of the founders. And at the same time, we're here to help clarify the path to innovation, growth, and success. And that is done through this governing body, which is the board of directors. Typically, a board of directors will meet every 3 months. But on a practical basis, if I talk to the portfolio companies I manage on a weekly basis for different topics. Not because I'm chasing them or whatever. It's more because that we have to share a number of information back and forth, and that's more like a natural way of working on a day-to-day basis with them. I see another question from Julian. What is the most common cause of failure in your portfolio of deep tech companies? It's difficult to say. I would say it's not dissimilar to non-deep tech companies. It's sometimes the assumption that is made about the market doesn't reveal to be true. Sometimes it's an execution question. It's about not finding the right landing zone for the product or service. But in general, what I would say is what's very important and what's key, because all that is not dissimilar to the rest. What can be a bit tricky is to have the feedback loop up and running. And this happens for different reasons. There might be cultural reasons. There might be, when I say cultural, it's about work culture. It's about, getting to know who is the customer, who is the client, who will pay for the product or services people are building. And for some companies, that's quite easy. So if you're running a digital company, you do it by increment. You put something out there and you put an application, a website online, and people can access it now. And if it doesn't work, you change something, you change it, you push the changes online, and then you know what's going on. So that feedback loop happens quite quickly. For other companies, it's way more difficult to do that. For hardware company, for example, for biotech companies, you have to. It's a step function. So this happens by huge increments, and that feedback loop is more difficult to happen. So you have to slice the project into smaller chunks and really find a path to make sure that to transform that step function in something a bit more linear, so that you can achieve progress and make sure that progress is effectively trending in the right direction. So to summarize my answer to the questions I was answering, and I'm sorry because the screen, there are many questions now, and I think the question disappeared. But this, I would encourage anyone to increase the odds of success to be confronting to the market at all levels, at all senior levels, in particular the CEO. Be out there, talk to people, travel, meet with people. That would be my my advice against some of the failures, because it's about going as fast as possible to learn what will work, because what is certain is that you have to pay the salaries at the end of the month. So the costs are certain, the revenues and investments are uncertain. Andres has a question. What are the basic criteria for you to validate or accept the project to invest? Good question. So we have, of course, it's mostly the team. So when we see the team, we look for relevant, expertise in the field. You cannot invent something extremely advanced in AI if you don't have the necessary background or necessary ideas behind it or execution capabilities. So team is one, market is another one, so the prospective market. Of course, for early stage companies, we understand that not all the answers might be there. And so it's also on us as experienced investors to see where the potential can lie for that particular project or innovation. We have questions, not questions, but a way to analyze around the go-to-market strategy, how it is seen. Is it direct? Is it indirect through partners, etc.? So we have a number of criteria like this. Then, if those criteria are assembled, and the deal maker, the person who will be bringing the deal to the investment committee of Elaia, decide that it is complete, then we have an investment committee that is voting for each of those criteria, so that's called an investment committee, and we have them on the Mondays. And that's when we decide to go as a group of voting members. So typically it's 5 voting members per committee. As a group of voting members, we decide on how to invest based on the notes and the discussion. So it's not only the notes, it's also a discussion about sharing, the perspectives of the perceived risks and strength of a particular project. Sylvie, I guess I've answered mostly the question about failing and success. There is no recipe for success. Otherwise, we would have many books about it, and it wouldn't be. But it's not. There is no easy recipe for success. I would say resilience is obviously a good ingredient, and also speed. And also like thinking about respecting your co-founders, getting along together, because that goes a long way. So clarity, resilience are necessary ingredients, but they are not sufficient. Joachim, is your VIS interested in health impact startups? Yes, we've done a number of investments in health, both medtech, medical device. We are interested in digital therapeutics as well. Obviously we have a life sciences dedicated team. So we invested, to give you a few examples, in Mabling Bioscience that does medicines for cancer. We invested in Minos Bioscience. We invested in Aqemia, which I mentioned before, which is a drug discovery company, etc. So the answer is yes. To what extent and under what main conditions you co-invest? So we like to lead. So that's a question from Clara. We like to lead or co-lead rounds. It really depends on the geometry of the deal. What we see is that some bigger deals, especially in life sciences, are so large that even at early stage they need to be syndicated. So we work with a number of other funds that we've invested with before, alongside them as co-leads, and that's we like to work with people we've already worked with and that are competent in the field. That are the some of the conditions that are required to co-invest. So being a co-lead and working with people who deliver value. Stefano, what is the weight of SDG metrics versus financial ones in decision to invest in a deep tech venture? Is it required any commercial traction to be invested for a deep tech company in energy tech and climate tech, which in contract with clients or many POCs? So commercial traction is always better, obviously, but a contract or sometimes even a POC is a late indicator of the activity of the company. So we like to look at also companies that are pre-revenue, but there needs to be a bit of traction. So traction, it can be product traction, for example. The product can be used, can be given for free, but if there is a growth in usage, in particular for digital companies, that's easy to measure, then it is not an absolute requirement to have commercial agreements in place with clients. And the number of pods and all that is, of course, that's more credibility, but it's not absolutely mandatory. We look at the technological or scientific assets, before that. The SDG metrics versus financial ones. So we have, we have audits for the impact, and that's one of the criteria I mentioned about in the decision we're making. But that's not the only one. We want our companies to become sustainable, and obviously, the financial aspects of it. is important. But the returns are not predictable. So we don't look at it through the prism of saying, that can lead to X return or Y return. If there is a large market, if there is a strong innovation, then that's what's needed. And then many things can happen between failure and complete success. Astrid, can you please give us some tips to prepare a long-term funding strategy? Max dilution per stage, how do we choose the best leading VCs, what we need to consider to be successful and sustainable in a long-term strategy. Yes, so dilution per stage ranges at very early stage. It's about 20 to 30% for early stage deep tech companies at the pre-seed and seed stage. Why this range is because it all depends if an allocation pool has been allocated for new team members in the future, right? So it can be like typical dilution, let's say it's 25% because of the money injected into the company, but then an additional 5% will be pooled as options for the team members that are coming. So that gives you a range 20 to 30%. How to choose the best leading VC? Talk to them and see who is making the best impression. And if you have the chance to speak to them, to the same person again, see if you continue to learn from them, from the discussion. And that's really difficult to do as a founder. I've started two companies, so I know the feeling, but it's about not selling yourself. It's about being genuine about what you're building, sharing what you're building, and see if the chemistry happens with your investor. That's how I would approach it. And I'm saying that as a former entrepreneur, not as a VC today. Of course, if I were to say that as a VC, I would say, contact Elaia. In terms of what you need to consider to be successful and sustainable in the long-term strategy, I think that goes beyond the scope of this, and we will be running out of time, but I would be happy to connect, and discuss that to further extent. I see a number of other questions that I need to answer, but there are numerous things that you need to consider for long-term success. That includes mostly, aligning, hiring, and questioning your hypothesis, over and over again, and review them. What is a hardware software project based on deep tech consider in order to invest? Do you prefer only deep tech software startup? No, we don't prefer only deep tech software startups. It's just that hardware startups have a different capital intensity and time to market. And that is something that we consider in investing, because obviously we manage a fund, and so it needs to fit. One of the criteria also for the investment committee is portfolio relevance, and that's through this criteria that we assess this part. But there is no objection to investing in a hardware software, deep tech company. We see that quite often in medical devices, for example. Joseph, as you know, NLP, I would like to hear if investments in the following month for technology built on top of large language models, ChatGPT, GPT-3, etc., will experience a significant rise. That's difficult to say. It really depends on the project. So I'll give you an example. We invested in a company called Giscard. And Giscard analyzes, the biases in machine learning models. So, for example, all things being equal, if I'm a bank, all things being equal, do I give or do I grant a loan more to male than females, even if they have same age, same risk profile, same revenues, etc. Typically, granting a loan is done through a model, more or less sophisticated, and Giscard analyzed these kind of things, and has another product that simplifies the testing of machine learning models. If you look at what ChatGPT brings, it brings lots of opportunity, but it's also full of biases. It's also, it will enable lots of startups to innovate, and they will need to test the things they built on top of ChatGPT. So for companies like Giscard, that's a big opportunity. If you want to develop something that's an alternative, if you or like a chatbot, let's say, just to compare it with ChatGPT, then you will need to have strong, conviction to find funding around this. So it's the answer, Josette, to your question is both. It will be a significant rise for a number of use cases, but it also, swipe a number of things, VCs would have invested in prior to their existence. Mauro, how do you usually calculate valuation of an early stage company that is not generating revenue yet? Typically, it's not a calculation. It's about the balance between the amount the company wants to raise, the stage of maturity, and the dilution accepted by the founders. There's no tangible elements to that work, in a systematic way to calculate a valuation. There are methods. I'm not saying there are not methods, but they all have caveats, and it all depends on the shape and the form of the company. So it's mostly done by finding this balance based on capital requirements, dilution, and adequation to the stage. Clara, thanks for the tip. How do you scout startups and how a startup can contact you? So good question. We scout, we've been there for over 20 years. We have a very strong deal flow. I was mentioning over 4,000 companies per year. The way we scout startups is, we have inbound, obviously, we have our partners. So some of our investors, large corporates, they see startups that contact them and they want to have our opinion. And that's why they invested in Elaia, is to talk to a team of professional people who can assess a particular startup. So that's another strong source of deal flow for us. The third source is what we call hunting. So we have people who are looking, what's happening on the internet. We are, if you be more precise, when we see someone saying on LinkedIn, hey, I started this new project, I'm becoming a founder, that's something we look at. There's also, attending conferences, attending events, being speakers, being jury members. Today is also a good occasion to connect with some of you who are entrepreneurs. And also we are visiting the labs of different research organizations and universities. So that's the short answer to that question. So we have a holistic view on the market. And why do we do that? It's because for us, it's important to prioritize. You don't know if what you invest in is the best until you know what's there on the market. So we look at everything. We scan the whole ecosystem and then we prioritize. Raphael, are you interested in edtech startups? Yes, edtech is one of the fields. It all depends on the underlying technology. If there is a strong tech and digital asset that can qualify as deep tech. So let's say you are a net tech startup that helps kids to improve math, and to do that you systematically measure how, a bit like Duolingo, you measure how people respond, and you have a machine learning algorithm plus a number of sophisticated ways to decide what's best for them to learn this particular part of arithmetics, and you do adaptive training. That could be one thing. If it's more content-based. Unfortunately, in the deep tech seeds practice, no, we will not invest. So that gives you like the prism perspectives on the, so the field itself, yes, the underlying technology is what we will look at. Frédéric, in your experience on valuation in the last month in deep tech company, I guess you're referring about the potential drop in valuation considering the markets. My take on it is that we see that there's been a bit of a drop, but you know, in early stage deep tech companies, that's not where the drop is, you know, because it's not material exactly. So it has dropped a little bit. There is less, you know, activity on the investor side, but some people, I mean, some funds, lots of funds still have dry powder to invest. So it's not entirely like 2021, 2022, where the valuation were going up to the roof. We came back to something a bit more reasonable, but it's not, it hasn't been divided by two for sure. Susanna, average ticket size. I haven't calculated the average ticket size because there's the first ticket and they are the follow-ons. And because we do asymmetrical investments, it's difficult for me to give you the average ticket size, but we invest tickets that are 300K, 800K, 1.2 million and 1.5 million. And that's, you know, stage adapted. So these are the 4 tickets we have, more or less what needs to be adapted in the context of a specific round. So if we need to make room for amazing business angels who could advise the company and they want to put 50K, you know, of course we accommodate that, but for the interest of the company. But these are the 4 ticket size. Do your investees have a phantom share politics? So there is a general, you know, how to call it? I'm losing my words, but incentive scheme in all of the companies. Yes, whether it takes the form of phantom shares or not, depend on you know, the jurisdiction. It's not called phantom shares in France, for example, but here in Catalonia, yes, we have companies with phantom shares. Sometimes it's something else. DM, how is the economic outlook for the next 2 years comparing to the last 2 years in terms of investment? Will this affect new startup recently invested in? For startups recently invested in funds that are less than, that are still in their investment period, the funds managed by professional investors normally have, you know, follow-on reserves that should allow those companies to stay well-funded over the course of their lives. That being said, of course, you know, if companies don't perform well, the underlying reasons should be analyzed by the investors, because it can be structural. In that case, waiting 2 years or waiting 4 years for the economic downturn to stop will not help the company. Or it could be because of the economic situation, and in that case, you know, some companies are worth, you know, doubling down on for passing this bad moment. And companies will be affected by it in different manners depending on you know, on the topic or on the field they operate in. In deep tech, however, that's a bit countercyclic. So you know, because it takes some time for the product and service to take off, the economic downturn won't be affecting them as much as other major companies that already have like lots of revenues, and they can only suffer from that situation. Clara, what criteria do we decide to exit an investment? It depends on the situation. So, there are companies that have great technology, and we always invest in companies that have great technology. And Manuel, I see has the same questions below. And there are different situations. The first situation is that the company might not perform as well as expected because of the appearance of a very well-funded competitor with superior technology. That can happen even in another geography or expansion plans in the new geographies. If that is the case, both the founders and Elaia might decide to sell the company, and in that case we would hire an investment bank to lead the operation. In more successful companies who are sustainable, growing in a standalone mode, we can go to the IPO, which is like what we've done with Criteo. We can also provide liquidity to our investors. So, for example, we might exit a bit of our position when there is let's say, a private equity firm who wants to invest in one of the more mature companies. So that provides liquidity to our investors. And once we've done our job, which means bringing the company from pre-seed seed to companies in excess of 100 million revenues, that's also another possibility to exit. So that kind of really depends on the performance of the company. And sorry, there's an element I forgot, which is very key. It's strategic acquisitions. So we are regularly approached because of the quality of the technologies we invest in and the assets. They're approached by strategic acquirers who want that piece of technology to for their development. So that was my case with Mesograph and Twitter. That was the case with a company that we sold to Spotify. So that's a strategic acquisitions. So and to answer Manuel, there's not a main one. There's the one that happens most of the time, which is exiting through investment bank or through a strategic acquisition. So they are not the main because we want it. They are the mains because that's how it happens. So I think we are running out of time. But we don't have any more questions. So I hope this has been helpful to the panel and to the attendees. And if you want to contact me, you can find me on LinkedIn. And don't hesitate to reach out. I would be happy to answer your messages and continue the discussion. Thank you so much again, Oriol, for having me. And I leave you the final word.
Okay, Sébastien, thank you. Thank you very much. Thank you very much for sharing your time and answering the questions. And let's meet ourselves at the 4 years from now, okay, which is the main event and that we're working on. And that would be a place where all the startups would meet, and Catalonia will have a pavilion there, so you can be there and cheer us up. Vinga, adeu, bon dia.